computer. All right, guys, we are ready to get started. A couple of minutes late, but all good. We're ready to get this thing moving. So welcome to our Sunday night webinar. This is our second webinar introduction. Wanted to jump on and just go a few more educational topics with you guys. Have a quick look at the market as well. So we've got some epic content to go through with you with Troy. Troy's going to be up first, so I'm going to let him do a quick introduction about himself and tell you his story, how he got started in trading.
All right, g'day guys. Thanks for joining our Sunday session. It's free, so make the most of it. A quick introduction for those who don't know who I am or how I got into it. Started trading in July 17. And got completely hooked and went full-time by September, which is only a couple of months later. Was completely consumed by the market, by the opportunities the market presented, and just understood the opportunity ahead of me, and took the risk and quit my job and went full-time trading, and it has since paid off tenfold. I was introduced into crypto as a good deed from a guy I actually helped fix his computer, and I refused to take payment from him. And instead of paying me, he showed me coin market cap, and light bulbs pretty much took off in my head when I saw the percentage movements that were happening every 24 hours, and decided to learn the market inside out from that point. Caught the alt seasons in 2017, both of them. Traded both of those, and then was able to lock in a lot of that profit at the top in December, as most people know as well. Pretty much once I put the time and effort into actually learning this market instead of just wondering how it was done, I actually started to break constant gains, actually being able to protect those gains, because a lot of people can make money in this market, very few keep it, which most people know. Most people failed to lock in profit in 2017's peak. Other than that, that's pretty much it for my introduction into trading and the rest of it. Did you want to introduce yourself at all first, Carl, or just straight into the...
Yeah, I'll go. So, yeah, thanks a lot for that, Troy. Basically, my name is Carl Sarrell. I'm the other host of Altcoin Mastery webinar series. We're going to be getting started in October 22nd. We're getting stuck into that, and it goes for 6 weeks. Obviously, Troy is my business partner and trading partner. And so basically a little bit of background on myself. I have a bachelor's degree in finance and economics from the University of Swinburne in Melbourne. I first got exposure to trading in markets when I was in primary school. I traded the stock market game. Obviously fake money, but I was about 12 years old. But it was a lot of fun. I got hooked on markets, and they've always been fascinated ever since, which is what took me to go and study finance at university. And then, yeah, basically, always been in and out of markets and stuff like that when I was younger, and been interested in trading and stuff like that. And had a little dabble of trading foreign exchange and stuff like that. And obviously more buy and hold strategy on stock market and things like that. And then got really more in depth and became a full-time trader when I started trading cryptocurrency, because I just found it was a lot easier to trade than foreign exchange markets. And because the markets were a lot younger and more simplified, and found it a lot easier and more profitable than trading stocks as well. So I became pretty hooked and fell in love with the markets. And because everybody knew, a lot of my friends knew that I've been trading for a long time, studied finance, and was into that sort of sector. When the market was going crazy in 2017, I got so many people, coming over to my house all the time and calling me up and asking me for advice and all that sort of stuff. So I basically just started the Facebook group and got everyone together and ran a mini seminar basically, and it went really well. And had a couple of people there that were like, you need to turn this into some sort of a program that's a bit bigger than that. And yeah, basically ended up starting Altcoin Mastery in 2018 as more of a real business. And that was basically after I saw the quality of the educational material that was actually in the crypto sector. I did a lot of different courses and wasn't really impressed with many of them, so I decided to start my own. And yeah, the other major factor was I saw how many people, especially in that alt season that we had in January 2018, when I really realized that I needed to do this just to get help people out basically, because I saw so many people just get ridiculously wrecked on, coins like Verge and Tron and stuff like that. In fact, I'm pretty sure it was Tron was the time I saw everyone get wrecked really bad. I was like, Jesus, like the lack of education in this space is really bad. So just want to try and get out as much content and value to you guys and train as many of you guys up so we don't see you guys get wrecked in the next time we go through that phase of euphoria and you guys, come out, because you have the potential to change your life in this market if you know what you're doing. And you also have the potential to lose ridiculous amounts of money very quickly if you don't know what you're doing. So that was really the purpose for me getting involved in the education space. So yeah, I'm going to pass it back to Troy because he's going to take the first part of the content. So what we're going to go over tonight, we're going to cover. This is a quick market overview. I'm going to give some views of mine. Troy's going to give some of his views. We're also going to go over different pattern setups as well. So we're going to go through boarding descending wedges, triangle patterns and falling wedges, and also Ichimoku cloud. That's going to be Troy's section. Then I'm going to take you guys on the thing that I think is probably more important than actually being able to chart, because everybody talks about charting non-stop and technical analysis and all that. But risk management, I think if you have zero risk management, even being a really good being able to draw lines on chart really well and being good at technical analysis, it's going to severely inhibit your ability to become a profitable trader. So we're going to go through risk management. We're going to go over setting stop losses. We're going to look at why new traders and experienced traders consistently get stopped out all the time, and often they get stopped out and then the market goes in the direction that they thought it would. So I'm going to hand it back to you now, Troy, to take us over some of your content. I'll let you share the screen now, actually.
Cool, dude. I'll take over. Give me one moment. All right. Can you see my screen? Is that working?
Yep. See you soon. Very nice.
Wait, just bringing up the chat again on the second screen. One moment. I can't do that. Why? All right, cool. We'll carry on. I can't see questions, so I'll just quickly fix that. Sorry. I don't know how to do that properly here. Cool. Q&A. Here we go. Is the chat working tonight? That should be fine. And the other one. There we go. Cool. We got both up. Cool. All right. We'll start. Going to focus on just basic patterns tonight, and then Ichimoku, which is more of an advanced indicator. I've got a few tabs open already that we'll go through and cover and go from there. To start with, we'll just start with simple falling wedges and triangle patterns, and they are everywhere on a chart. And that's pretty much how a market continues. You get a bit of a falling wedge, you get a spring, falling wedge into a spring, and so on. And these happen on all time frames as well. This is a 30-minute. This is current price action recently. If you're paying attention last week, you would have seen a bit of a rally to the bull flag, which is a falling wedge here, to the retest here, and then the squirt continuing. If you were to trade this and you're not quite sure how to trade flags or where to take profit, we can quickly run over that now. This is the flag of the bull flag, which is the pole of the run-up. Normally you go from the lowest point for how I trade to the highest point of the flag, and then just use your fibs. So I'm going to turn this magnet tool off real quick. I'm just going to drag it from the point of this. I'm just going to bring it across so we can see how they played out further on. And what I've done here is, well, this flag pole you can see here is just a measured move. We can just do it again, pretty much from the bottom to the top here. And then if we mimic that and then bring that over here, which is what I've got this pole here for, it actually gives you a measured move here of where you should be looking for a potential take profit based on pattern trading. So this told me on this falling wedge, that the bull flag, they call it a falling wedge. Once we got that bullish retest in here after breaking trend like that, the target was the flagpole, right, which is just here. And if we then look at the Fibonacci, we go into the fibs and actually allow us to see which fibs we're using. Let's make that on the right side. This is the 0.618. This is usually where you take target, which is also the 1.618 if you have it in the inverse. And you can see that's exactly where price ran to, right? To the dollar. See that here? So all we did was draw a fib from here to here. What you do is you take your first position entry here, or you could try and front run the market by getting the last bounce. It's usually a bit more risky. But you could always take a smaller position entry here with your stop loss maybe under this. And then once it's confirmed, add more in one of these two candles here to then ride this entire wave up. It's a very, very easy trade this. So they call it a clear bull flag, falling wedge. We'll move back on to the previous chart, and you can just see the entire market pretty much just works in these triangle-like patterns, which are just these are falling wedges here. Massive, large, descending triangle here, which is where you can see just price. Everyone knows this meme triangle, right? It was a descending, which means that the bottom was flat, but the top got lower and lower, which had a high chance of falling to the downside. And then we have the opposite down here, right? And then we had the upside. And now we're back here again. We have descending, and now we're on the downside again, right? So simple triangle patterns. They can make them save you a lot of money if you understand how they play out. Something you also need to learn about with these is the measured move. If we go back to say this part of the triangle here, and we measure this, I think it's from like here to about here, it's about 50%, which is the length of here to here, right? And then when we fell from the break point, we fell exactly 50% as well. So if you understand how these triangles work, just like that previous one we had a look at over here, the measured move, where you should be taking profit. This is also telling us that this is where the bottom was going to be based on the measured move of that descending triangle, right? So if we go back to our current triangle, it's a little bit concerning because we haven't quite reached that measured move. So if we go from maybe this one down here, it's about 26%. I think we're only about 18 maybe at the moment. Yeah, about 17. So wouldn't be surprised if we see a bit of a spring down further to reach the measured move of this. But at the same time, it's not guaranteed. That's just pattern trading, right? Just what to look for. If we run a fib tool like we did previously, from the top to the bottom and went to our right, we'd be looking for this to be our bottom, which would probably also be that measured move. We go from the break down to here. Yeah, sorry, a little bit further. At 26%, 24%, which would be the measured move of that, right? So I wouldn't be surprised if we see that spring down, just like we did over here. We would consolidate a little bit to the sideways and maybe get a spring here if we are going to repeat that. It is looking pretty close at the moment, but we may have already had our spring here or here because this is a minor fractal. All right. Let's move to the next chart. Another pattern that plays out often is the this one. No, this is the bump and run top. I'll just cover this again. So this little section, this green section here, I'm pretty sure is this. Yeah, so what I've done is I've set this up to be similar. So we can see here, this is your bump and run top, yeah, ascending, broadening wedge, which then fails and turns into a market cycle, right? And we all know this particular pattern, and it's now repeating over here. But this little section that we can see here is this chart here, which was actually when I got into the market back in July 18. This is where I entered. But if we look at the same fractal, we've got the 1, 2, 3, then we got our triangle into our breakdown, and then we launched. And now what we've just done is done a flag, and then we've dropped out of it. But technically, if we are fractal trading or pattern trading, we are right here in a market cycle. If we go back to this point here in our market, based on this fractal that plays out over and over. Wrong one. We're actually at a really, really bullish point, actually a really great risk to reward area to acquire Bitcoin based on previous market cycles. And this happened on all time frames. But this is just one of the flags that we had in 2017 on the way up, which created the very large version of it here. And now it's got a little mini version of it here again. So really interesting point. It's really worth learning this particular pattern and how it plays out, how to trade it. It's usually once it's printed. So if you were to be trying to trade this particular one, you would be waiting for this point in time here. So the entire pattern would have played out, and you would have seen that this is a broadening, so it gets wider as it moves up. And then once it breaks trend over here, you can see it goes to the retest. Based on this pattern and how you trade it, you actually enter a nice short position on the retest. because this is how the pattern works. So you enter your short in here, you have your stop loss either above here or even lower down here, based on what your plan is, your risk management strategy and the rest of it, and then you'd look to short that. So if we press played on that, based on that pattern playing out, we would have got a nice entry for a short, and we could have held this short for the entire market cycle and ended up taking profit over here. If you understand how market cycles work, a lot of large players wouldn't have taken profit straight away. They would have left this short open for quite a while. And this happens constantly, and then the inverse as well, which is pretty much a broadening descending, which is this one, which is where you're looking for a long target once you get back above. So yeah, you take profit once you've broken the ascending, the downwards trend. You'd look to enter here and then take profit, and you can even re-add to your position here based on how this trend trades. I think I might have found a couple. I'll go back. There's one in our current market cycle. Sorry, so I'm just going to have a quick squiz. Back in this triangle up here, we had quite a few of these play out. So I'll just quickly find them again. Here's one here. This one here failed. But you can see that the pattern's there in the sense of this, the broadening part of it, the free dips, the little cup, and tried to break out. Trend was very bearish at that point in time, so it's failed and come back down. Then we had the opposite version of it happen over here to the upside, which is also just that same pattern again, right? So when you see these forming, and you finally get the break, if you make that trend line a bit cleaner, you've got a bit of a bearish retest in here, and this is where you would have looked to short, because you would have seen that there's the pattern here, the broadening ascending. This is the ascending version, and when you get that bearish retest in, double top, it's a nice clean short entry, and then you can just ride that all the way down. And if you were trading this like I was at the time, you would have got a nice penny from that. And on lower leverage, that was a 20% move. Oh, and what signs tell you price it going to drop or rise? What do you mean exactly, man? I mean, like right now, looking at this, what would I look for pattern trading? It's maybe see this as more of a again, maybe an ascending. You're getting a higher low here so far until proven otherwise. In a higher low on the large time frame here. That price is staggering sideways. Looks like we're in just a bit of a chop zone here on the 4 hour though. We'll move over to this particular one. So patterns again. This is the fractal that we're seeing play out again over here. So based on time and percentages, the first week of November is when we should see some price action based on the days broken down maths-wise to here. So this is what I'll be watching for the market. See some consolidation and maybe just some slightly rise in price. Then I'll be looking for price action here, or either a long or a short based on how the market responds. I think we're not going to do much until November. I think altcoins for the next week or two are going to end up having a little bit more love in them. And yeah. Another thing I wanted to touch on again is that same pattern again, the broadening ascending. This is Bitcoin from back 2011. This is the first major pump here, which was in 2013. And they had their bear season that we all know about. And then we've got our current top 20K. This could technically be the same again, just a very large broadening ascending wedge. And if this was to play out, once this trend line here was broken, is when I'd be looking to take serious profit if that ever happened. This is just a fortune telling bit of a chart here, but it's that same pattern playing out again, just on a much larger time frame, right? So if we end up breaking this trend line, if and whenever it happens in the next five years maybe, take profit, guys, and learn how to trade before this happens, because this green box I've marked here, pretty much where this trend line comes up, this will be the last chance you have to be one of the early investors into this market. I think we are still very early. A lot of mums and dads and then have all been scorned. They don't want to know about it. which is fantastic for investors, right? You buy when everyone else is hating. Fundamentally, it's better than it's ever been. We're going to go up inevitably, all right? Other patterns to have a look at. This is a fantastic cheat sheet. There's plenty of cheat sheets on my Discord and on Crypto for Blokes. But this one in particular just shows you exactly how the trends play out, and when they're bullish or bearish based on how it's playing. Any questions in regards to patterns, guys? Anything in particular you don't quite understand, or what to look for, or cool. All right, we'll carry on. Head and shoulders patterns, these are very common. I love trading these to short the market. These happen constantly on the small time frames. If we go back to here, get rid of this, go down to the 5-minute time frame, you can find these everywhere usually. And it's usually the retest that I take to short. For example, I would have called this one here, which is a bit of a bear flag, which didn't break out. But you can see you've got the same little pattern here. We've got a left shoulder, got a head, and a very failed right shoulder. Then you would have taken a bit measured move to the downside. So usually, even though this is 5-minute, usually that's what your target would be to the downside from break point. So it's come pretty close from the measured move, which is pretty good. If you understand how to trade this kind of stuff, that move there on leverage was 67%, sorry, 0.67%, which if you're trading on high leverage like me and Kyle do, that was 67% in 15, 20 minutes. So when you guys, that question earlier about did you make more money now or in 2017, making much more now, because you can make 67% in 20 minutes now, or in 2017 you could not do that. You had to wait for some dirty pump dump group to throw your coin to the moon, right? That's just a basic head and shoulders playing out. Here's everywhere. There's another inverse one here. You can see that this is a shoulder, head, shoulder. We go for the measured move. That's a pretty dirty wick. It's a bit of an anomaly, but if we measure it, still come up pretty close. And this would have been a bullish retest over here. See how the price is carried on, but it still ended back up to here before carrying on, right? And then created that head and shoulders before coming back down. So if you're 5-minute trading on candles like me and Kyle do most days, you can constantly make profit within this. And you'd wait for this pattern to complete before taking a trade. Like this would have been a nice long entry both here and here. Because if you have another trend line coming down like that, that was also a retest, right? You can learn this stuff once you start to master candle trading and pattern trading. And that's what we cover a lot in the online course in detail, because price action is king. Indicators definitely help, but if you can understand what's happening on the chart without an indicator, which is how I do most of my trading on the 5-minute, you can make a lot of money, right? You can turn a little into a lot as well, based on compounding your gains with high percentage wins. It may sound like it'd be a Ponzi or whatever, talking like that, but it's very true. Cool. Let's go through these. I highly recommend printing these kind of sheets off and studying these, or just having them nearby. So when you are charting and when you are learning, you've got a reference to go to, or just having them on your computer somewhere, or just somewhere accessible. These are my key when I was teaching myself back in 17 and I had no support. But the thing I don't understand is when you reach support lines, etc., what are you looking for to indication the price will drop or rise? Volume can help, but it's more of the patterns and how they play. So I'll give you an example, right? So this price has already happened, and now we're watching to see what will happen. So when we start to make this descending line here, I'll just clean the chart right up. When we start to make this descent here, I'm not looking for a trade until something's clear. So we can see that it's got 2 touches, 1 and 2 here. So I'll be waiting for it to break this and then retest this. Once I can see price starting to incline after breaking this trend line here, I'll then be looking for a long entry, which is this, which is also the the flag playing out that we can see as well, right? So when we can see this happening, this is a very bullish setup. It means that price is launched, but it's failed just to dump off, and it's being held by the bulls. And then we can see that it launches again, which you can then see one more time up here as well. You can see that once it broke that line again after already launching once, it tried to launch again and then got nuked, which is not unexpected because technically this could have just been a bit of a bear flag playing out on a larger time frame. So yeah, and we are in this new trading zone now across here. This was where the top of the trading zone is going to be based on, if you understand, wick off. So this was always a take profit area. I never assumed we'd be breaking out yet, so I wasn't looking for a breakout trade here or along here. 5-minute DG candles. What time frames do you usually use? Depends on your time and availability, Joel. I personally like to jump on, find a setup or find out what's coming throughout the day. So for instance, once I've done my daily scan, I'll then look on maybe the 5-minute time frame, look for something to play. Like right now, we're looking at this, and I can see on the 5-minute time frame, we've got a bit of a trading range through here and here. You can just see this is where price is respecting, and you could probably even go one more through here. So if I'm just trading 5-minute candles, I know that I'm most likely looking to long here once we get back above, if we do fall, and I'll be looking to short here with a tight stop loss, and then definitely short here with a stop loss here as well. And then looking for patterns playing out within these as well. Just as I was covering before, the broadening descending, even on these small 5-minute degen, you can see like this particular pattern, the 3 dips in here. Once you break that, it's usually a bit of a bullish sign. On the 5-minute, you'll see it happen quite often. That's what I look for in purely candle and pattern trading. It's just break of trend lines and patterns playing out. You can also see this one here in particular right now is a inverse head and shoulder looking thing here. So I'd have a bit of a trend coming through here. And once this is reclaimed, I'd be looking for a long, expecting it to either come back up to here or claim that and head back to here. All right. So we'll just leave this open while Carl takes over shortly, and we'll just see how that plays out. That's probably a trade I would have taken or will take if price can claim and hold this. The thing I don't understand is when you reach support lines, what are you looking for? Indication of price? Or wait for it. Yeah, definitely wait for confirmation, dude. You always be happy to lose a little bit of percentage and potential profit than getting in too early and getting wrecked, right? Because you're better off making 5% every time than you are trying to get that 10%, but getting wrecked more often than not because you're trying to front run the market. The other thing we're going to cover is ichimoku. I'll just get into that now for anyone who wants to learn this indicator. It's a bit more advanced in how it's used. You can use this in a simple way as well. I'll cover all versions of this now real quick. This is something we go into quite in-depthly on the online course, but I'll just give you a bit of a rundown now because I think this is a very, very powerful indicator that everyone should take the time to learn. I'll just take the ball off. So I've got 3 different ones here, and I'll go over each of them right now. So this is the particular one that I use, and I've got it set up so it's just, I don't think it's this one here, sorry. Yeah, this is the one that I use. When we go into the settings of this one, it's got the standard settings. This is how it by default comes. And then with those settings, it presents you this cloud here, all right? And then you get another cloud coming through. And you can also see here that price is currently here, but it's actually predicting from here 25 bars into the future here, 25 days. All right, so it's telling you moving forward, this is where your resistance is going to be if you're under it, or support will be where you're above it if you're above. There are moving averages that come with this. They're called the Tenkan and the Kinjun. We can throw them both up and I'll show you how these work. I think I've got that on the bottom one though. This particular one here. So this is the standard settings here as well. And both of these moving averages that follow it, when above, they act as support. and resistance. And then when you're below, same thing again. But you can see this particular version where it says CM Enhanced Ichimoku V5 actually has an option where it draws a cross on your chart here, which you can see these arrows on the chart. It's telling you that these moving averages here are crossed, and then when they cross, there's usually a bit of a reaction in the market. So you can see that the pink one here, which is the shorter time frame one, which is the 9, has actually come up through the larger time frame one, which is a 26, and then giving you an entry based on Ichimoku to go long, because price is currently above the cloud. The 9 has come through the 26. You'd be looking for a long entry in this range here, and it got you a nice run based off Ichimoku, right? We can also see that when price declined from this big parabolic run, that we got a nice, beautiful bounce off it here. So once price came down, found support, and launched. Yeah, and that's a trade that we actually took in Discord. And I think I even mentioned it on Crypto for Blokes that we come down to the daily Kumo cloud, expect volatility. And I think there was actually quite a disgusting pump percentage. Yeah, about 20% that was. That was pretty nuts. And that was just a simple Kumo bounce here, right? And you can see moving forward, once it got in, down to the bottom, got in, rejected, come down, rejected again, come down, go back into it, edge to edge again. You can just see how it reacts the entire way with it. And that's based on the standard settings. When you're above this cloud, in particular, you're technically bullish based on how Ichimoku is, and this is the daily time frame. So that means it's greater than the smaller time frames, hold small weight. And then once you're through the cloud and under it, like we are in now, we're actually in a bearish market based on Ichimoku. There's a different version of it as well that you can use, which is the crypto settings, which is just loading up now. The crypto settings here, if you want to write these down or print screen that. These are the settings for crypto. So this, I'll just overlay both of them right now, just so you can see the difference. I've actually got an indicator, a template up here at the top that has both of them because they both hold weight. So the standard market was built around markets closing on weekends, where cryptocurrency never closes, right? So these settings that they use on the this cloud are actually based off a 24/7 market, and you can see that price also reacts to it. Got into it, it's fallen down, rejected by here again, down support from here, rejected here again, finally fell out and capitulated, right? It's not a foolproof strategy, but it definitely helps you to use these on the larger time frames to see where you are in trend. Until we technically get back into above a green cloud, are we bullish again? So right now we're getting a bit of a fat red cloud like we did over here. All right, after you can see the two play out. Once we fell over and got under and stayed under, became resistance, 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 and then we dumped off, right? And you can see on the upside, they went from in, down support, launched to the other edge, down support, launched, right? You can see just how this indicator could really help you understand trend, where invisible support and resistance may be that most people who don't use this won't see. I definitely recommend learning these, but I'll show you up here if I can. I've got this one here called Ichi2X, and what this is an indicator that has both at once. And then I can just turn one off and turn the other one off. Just allows me to see constant support and resistance of the trend. Get down to the smaller time frames as well. I wouldn't use both on the small time frames, but you can probably see that Ichimoku works on these small time frames as well. Usually works with support and resistance. Maybe go to like a 30-minute, less autistic. Yeah, you can see here it's working as a bit of support, finally gets above, breaks out, comes down, finds support, gets under, falls down. We're finally back in. So if we can hold this, we should launch up. All right, just based off Ichimoku. There's a channel on my Discord that has quite a few tutorials on how to use this or get to use this. There's also a few, I think there's a channel or a panel or something in Crypto for Blokes that also has a education section based on this as well. I highly recommend taking the time to learn this. Binance did a fantastic little video on it. I recommend finding that and then going from there. Looking at it now, I would say with Bitcoin current price, if we can hold this until the 14th, which is tomorrow, if we can stay above this range here until the daily close and weekly close tomorrow, we could probably see some price action to the upside. If we can hold above this orange cloud, you normally be on top of it as a support. We might ride it sideways and then hit up. But this will be something to watch for our standard cloud coming up. Usually holds quite a bit of weight. Yeah. Anything else you want to add, Kyle, to patterns or ichimoku?
Yeah, I'll have a little chat about bull flags, but I won't go too in depth because obviously we're going to run out of time if I did. But yeah, obviously we go pretty deep into basic basic strategy, which has a lot to do with pattern trading, especially when the market's bullish. But if you can learn how to trade bull flags really well, money going on like an 80% run in 2 weeks, like we did in June. I think that is definitely when you're trading on margin and you're long your bull flag. I think that's the easiest money to make in this game, honestly. I think everybody needs to be really efficient at trading those. If you don't, you're just leaving so much money on the table. It's definitely the way I've made majority of my portfolio in times like that. I always find it the easiest to trade when the market's really bullish like that. So I think it's really the point when the market's asking you how much money you want to make and you can throw it down. So yeah, it's definitely the one that you want to learn how to trade.
Sweet. Cool. Did you want to take over from here?
Yeah, I'll take over from here if you're done.
You go from in.
All right. So you just have to stop sharing.
Yeah, let's jump on that at the moment. It's on my second screen. Cool.
Okay, fantastic. Here we go. Let's go have a quick look what the market's doing at the moment. I'll show you guys just a little chart I've had up and I've taken notice of. So this is basically the bottom fractal of 2019. So obviously this is November, December 2018. We come down, we form our bottom with 3 dips here, which is sort of what Troy was just talking about before. When the market sells off, it usually does it in 3s and then reverses, right? So if I had 3 dips here, and we come up, we had this really long and quite drawn out descending channel. And then obviously it breaks the upside just as it did in our fractal down the bottom here. All right, and then we have a support and resistance flip, come down and then slowly just grind up before we break out of the top order block sort of range area through here, which is the top of the range, and then it sort of takes off. And obviously we moon from there, right? Everyone knows what happened in the months after April, right? It was a pretty good time to be in the market. So we're sort of doing this on a lower time frame. So this one, obviously down below is the daily time frame, and up here is actually the 60-minute, right? So this is 1 hour candles, down the bottom is daily. So obviously this took a lot longer. It's obviously taken 3-4 months. Down the bottom, this has been a week or so, right? Almost 2 weeks now. Right, so basically what we're looking is if this continues to follow this fractal pattern, this will get a grind up quite nicely and start to push into what will look like a bit of an ascending triangle and do something like this, and then it will break out the top through this 8,800 range. And what I'll be looking for it to do is come back up and reclaim this level here, which is about that 9,500 level, which I've talked about a lot over various webinars and various videos as the key level that we need to take out for the bull run to continue, and that's where I'll be getting pretty heavily interested in the long side of the market. So I think this is, if you can, I'm not really a big fractals trader person, right? I think the market can always do anything, but Bitcoin does like to repeat patterns, that's for sure. And this is obviously a very obvious pattern that everyone has fresh in their minds, and it's starting to play out very, very similar. This is also a Wyckoff schematic 2 pattern as well. Wyckoff trading theory is something that we go through in the course as well. There's a full session on it. It is pretty in-depth, and it's pretty funny how close this actually looks to the Wyckoff schematic 2, which I'll post up in the groups afterwards. Anyone in any of our groups as well, that's one of the main reasons when we're looking at this is Wyckoff accumulation pattern in the start of 2019. We were telling everybody in our groups to get long through this through this area down here, the mid 3K range, because it just looks so much like a wick-off schematic too. And if you go back and look at the 2014, 2015 bear market, it's pretty much a mirror image of the wick-off schematic one, and so it's pretty funny. And then obviously now we've got a sort of mini version of the whole 2018 bear market with the parabolic top, and then we have the descending triangle, and now we're going into a wick-off schematic 2 bottom and accumulation range again. It'd be pretty funny if this then broke out and then reclaimed 9,500 and then took off into the rest of the bull market. So I'll definitely be having a little chuckle if that continues to play out. So what I was talking about just before on the bull flags, right? So let's go and let's get the chart up. Right, let's go this guy here. Right, so I'm talking about bull flags before. I think it's really important because, for example, through this stage through here, this was like a 2-week period where the market really took off and exploded about 80%. And there's 2 really easy, super easy trades to take in here, which is just standard bull flags, right? Both sort of ascending triangles. I mean, this one on the 4-hour looks a little bit uglier, but it's definitely in there on the lower time frames, a bit more of another ascending, right? So you just want to get good at trading these, because what the market actually does is it just does what you're seeing here, right? With this flag action, it just does this on the lower time frames and then takes off and then goes sideways. So pump sideways, pump sideways, pump sideways. And yeah, it's definitely a strategy that you want to learn how to trade. So we cover that off pretty heavily in the first week or 2 of basic strategy. So hopefully, if we've timed the course correctly in time with the market, it would be very nice for us to be taking out this 9,500 range through here, and the market starts to get really bullish, and we can actually trade some of these bull flag patterns live with you guys while we're running the course over 6 weeks. So let's see how that plays out. You're not going to obviously force anything or force any trades, because we always want to be just taking a step back and waiting for the trades to come to us, right? I actually have entered into a long in this area here, so we'll see if this plays out with stop loss just below there, because I'm just playing the support and resistance flip here and expecting the fractal to continue to play out to the upside, and then probably get a bit of a strong rally, at least to test this level, if we can break out above the 8,600 level. So let's keep moving forward, because we have to talk about risk management, right? And we're going to wrap this one up because we're running it out of time. So yeah, this is the thing I find that no one really talks about, but this is the thing that I think mucks up most rookie traders and most people that are new to the market. So the question I want to ask you guys is, how do you work out how much you put onto a trade? Do you just take a random number? Do you put your whole account in every single trade that you take? Just go all in times 5, all in times 10? How do you guys work out what to put down as your entry size when you take a trade? I know when I first started trading, I was like, yeah, all in on every trade. It's just the way to do it, right? And then I see some people, they're doing like all in every trade times 10 and stuff like that, because they're trading on BitMEX, and I just think that is absolute madness, right? And then you see the other side of it, where people hear, oh, you're supposed to risk 1% of your account. So someone might have a $100,000 trading account, right? And then they're risking 1K per trade, right? But risk, that what they're thinking is they're risking 1K per trade, and they're betting 1K per trade, right? And that's not actually what risk is. So risk is actually defined by what we lose if our stop loss gets taken out. Right, just going to check the chat box quickly if I can get it up. That's not giving me much love right now. Can't see your chat messages at the moment, guys, but we'll get to them a little bit later when I work out how to get Zoom working. It's been a bit, oh, here we go, we're back. All right, try to trade 5% of capital, max stop at 3%, depending on leverage and validation point. Okay, good. That's not bad. Yeah, so one of the issues I find, most people do is they hear people say, oh, 1%, so then they start betting really, really small position size, and it just doesn't make any sense, right? Either that or they're betting way, way, way too big, right? So what we're going to go over is how to set your stop loss, the positioning of your stop loss as well, and then we're going to go through position sizes, right? And why we need to be looking at the correct position, taking the correct position sizes, right? So an issue that most traders do is they trade the same size every trade, right? And then the variable factor in their trade is how much they actually lose on the trade, because the variable factor is not in the other direction, which it should be, because their stop loss is the only thing that changes, right? So if your entry size is the same every single trade, let's just say I'm like, okay, I'm going to have my entry size as 10,000 contracts, right? Or $10,000 every single trade. And then sometimes your stop loss is 1%, sometimes your stop loss is 4%, sometimes your stop loss is 10%, right? So every trade you take, what's happening is you're changing how much money you lose, how much percentage of your account you lose. So you're changing the amount that you risk every single trade, right? Because you have to remember that the risk is defined by the amount of money that you lose every trading account from the distance from your entry to your stop loss, right? And we have a calculation to work that out. I'll take you through it shortly, right? So the issue with this is, if you have a really wide stop loss, you're going to lose big. And if you have a really tight stop loss, you're going to take a small loss, right? So you're going to lose small. So what that then happens is it gets traders into a mindset of fear, especially if you've just taken a couple of bad trades, right? And as markets move against you, which happens to everybody, even the best traders sometimes, get drawdowns and they get, multiple trades in a row go against, because the market is random, right? So you have to protect yourself against that by understanding risk management, right? That's a whole nother topic, and we go really deep into that and how to set up your strategy to make sure that your trading risk to reward ratio and your win percentage is actually going to give you a profitable portfolio increase, right? But back on track. So what happens is, by trading like this, your stop loss is so close all the time to your entry, because what's happening is you're looking at it like, okay, if I put my stop loss down there where the stop loss probably needs to be underneath support, I'm probably going to lose more money than I want to lose. So I'm just going to edge my stop loss up a little bit. I'm going to put it in a position where it probably shouldn't be. It's going to be too close, but I want to lose how much I'm going to lose if it's at 5%, right? So I'm going to put it at 3.2, right? Because I only really want to lose, $300 on this trade if it goes wrong, right? I'm already taking a couple of losses, and you're getting this negative feedback loop. And what happens is you just continuously minimize your stop loss and put too tight stops on all the time. And then you're always getting stopped out. Because the only way to minimize your loss is by having a tighter stop loss, because your trade entry size is always the same. And then there's people who just randomly change the position size all the time as well, right? So the problem is, what we want to be focusing on is keeping the loss that we take consistent. And especially when you're first getting used to trading and learning a strategy or testing a strategy, you want to make sure that you're risking a 1% loss of your account if you get stopped out, right? So that is the key. The variable is the entry size. The variable is not the loss that you take, right? So let's go and have a look at, for example, a trade setup, right? So let's go have a look at this one we're setting up right now. So let's say we want to play the support and resistance flip, right? And we're like, okay, so, the guy said, we buy above support, right? We've had this nice little bullish action through here. We pumped up above and we've come back, and now we're testing the top of the support level. We're going sideways here, so that's a good little entry, right? So what I want to do is put my stop loss somewhere around here, right? I'm going to put it maybe just above this level here, because I only want to really risk about 2% of my account, right? So I'm going to put my stop loss right here, right? Which doesn't make any sense, because what you're doing is you're actually just putting your stop loss right above a level of support, right? So we want to make sure whenever we're setting our stop loss, we're taking entry in this area here, right? We want to be making sure that our stop loss is at least 1 or 2 levels away from support. So this is the first level support here, right? Which doesn't really make that much sense because you're still in this cluster, right? So the true first level of support is this level down here, right? And then your second level of support would be this level down here, right? It's probably a little bit too wide. So I think if it breaks down to this level, it's probably going to take out this level as well. And then you're playing the bottom of the range, right? So for me, I would like to get out of this if we break down through this level. So there's a bit of a level through here as well, right? So when setting your stop loss, you always have to look to the left, right? And make sure you're not putting it at a level of support. So I'm going to put my stop loss just below around this level here. So it's clear of this wick. I'm not in a clear liquidity zone, and it's just below this level a bit here, and it's in safe range, right? So from this point here, down to this point here. So let's just say that for mathematics' sake, okay, we'll do it properly. So we're going to do a stop loss of 3.46%, right? This is our entry here. This is going to be our stop loss. So let's set up our trade like this, right? This can be our target, the high, and this is going to be, yeah, so 3.46. Okay, right. So one thing to note as well is when we're setting our stop losses up, the tight stop is obviously right below the first level of support, right? So if you wanted to trade maybe like deep down on the 5 minute or something like that, you might put it below this level here, okay? And then your trade would probably be looking to take out the top here. Trading on the 4 hour here, so it wouldn't make sense to put the stop loss directly just below this level here, right? Because you're in range of just getting whipped out and then it comes back up, right? This price action could easily just go like this and then take off. And I see people putting their stop losses, within 1% all the time. And a lot of times it's just way too close. And if you are getting stopped out consistently and then the market runs in the position you think it's going to go in, a good little tip that I got taught a long time ago was if you're consistently getting stopped out like that and the market runs in the direction you're calling, try moving your entry to the position that you would normally put your stop loss and see how often you get filled and see if that actually makes you become a more profitable trader, right? So everything is about gathering data and gathering statistics. Right, so we're putting our stop loss below this level here, right? And then the next step is to work out how many contracts we need to be entering onto this trade, right? So how do we do that? Right, we go here, we get our calculation for our position size, right? So the calculation for position size is the total equity times risk percentage, right? So the risk percentage is if I want to lose 1% of my account, I'm going to put a 1 in here, right? So total equity, we've got $50,000 in this trading account. The risk percentage, we want to do 1%. So if I'm feeling really confident or I've been trading this strategy for a long time, or it's really in my favor, the setup, I really like it. According to my trading rules, I can change this risk profile, risk percentage to 2% of my account, 3% of my account, all the way up to 5% of my account, but I will never go to more than 5% of the account, right? Especially when we're first learning, we want to keep it at 1%, right? And then this last part of the equation, right, is the distance to stop loss from my entry. So in here, right, we're going to change this to 346, right? And so that will be 0.0346 is basically 3.46% that we had from here, right? So if we put our little trade set up here, so we've got our 3.46%, right? And that's what we're looking for here. So now we're just going to take this equation here like this. I'm just going to copy this guy into Google, because Google is our best mathematician, if I can spit that one out. All right, so then this is going to give me a position size of 14,450 contracts I'm going to enter in. So this will give me a position size if I get stopped out, right? So this will give me a position size. This will give me a position size if I get stopped out. So if price comes back to here, it will give me a position size in accordance to the size of my account, right, of 14,450 contracts. It will give me a position size. If I get stopped out down here, I will lose 1% of my account, right? And it's really important that we're doing this, especially when we're learning, because it helps a lot to take emotion out of the trading, right? It really does help a lot to take emotion out of the trading and just calms our nerves a little bit. So yeah, let's go over these quick points here. So correct risk management is to take the same loss on each trade, right? When learning, you want to limit that to 1% of the loss of your total account for each trade. This is what people really mean when they say risk 1% of your account. They're not saying that if you have a $100,000 account, to risk, your entry size per trade is 1K, right? So remember, the key thing to take away from this is the risk is defined by how much you're losing if you get stopped out, right? That's what you're risking, because that is the risk that you put on the table. Like if I lose, this is how much if I get stopped out, this is how much I'm going to lose my account, right? if I win, this is how much I'm going to win back, right? So it's important to know these variables so we can have a proper structured mathematical and mechanical trading system rather than just trading on emotion, trading how we feel, because it's sort of like if you compare somebody who can count cards versus somebody who just plays based on feeling on his gut and based on emotions, right? The person who's a card counter is always going to win at the end of the day. The person who's trading based on his emotions and how he feels and how the game's going, he's not going to be as consistent over time. And trading's all about building an edge, so you're consistent over time. That's what counting cards is all about. It's about building edge, so you have the edge over the casino rather than casino having the edge over you, right? So yeah, basically the stop loss needs to be where the stop loss needs to be in its correct position. You don't start moving the stop loss around because you like, okay, this is how much money I feel like losing on this trade. I'm going to move my stop loss to that position, right? It's not a good way to trade. Okay, so next up we have, obviously we need to have stop loss below support, right, or above resistance, right? I always look for key horizontal levels. Right, and then obviously when we're trading patterns and stuff like that, you look for the key support levels, which usually at the diagonals, right? Okay, and then obviously 2 levels away is a wide stop, 1 level away is obviously a tight stop. Okay, and then we calculate our position size based on the distance from the stop loss to the entry, and we use this position size calculator. Right, so any questions based on that, guys? Can be a bit of a confusing topic. I know some people do struggle with it. We will spend a lot of time on this when we go through the course, and we'll make sure that everyone gets up to scratch on this. Okay, too easy. So we're going to keep moving. Troy, do you have anything else to add?
Just to enforce the position sizing, really. The reason a lot of people lose a lot of their capital is because they overinvest into their trades, and they get emotional because they've overinvested in their trade, and usually lose more often than they win. So taking an approach like you've just mentioned and taking it seriously, applying it in every trade they do, they'll realize over time they'll be much more profitable.
Mm-hmm.
And it's not about your win percentage rate either. You can win 10% of the time and still be a highly profitable trader. You don't actually have to win every trade to be highly profitable as long as you have consistent approach to the market.
Yeah, definitely. That's your risk-reward ratio. We obviously don't have time to cover that off, but we'll go through with everybody in the course. We'll be going pretty deep into risk-reward. And we'll be probably showing Trader Travis's little tool that he showed us when we were in Bali to demonstrate that visually, how your win rate percentage and your risk-to-reward is a calculation, and you need it to balance have a profitable trading strategy. And it's pretty impressive. So I'm really excited to show that to everybody when we go through the course, because it's basically how Troy's mind works, and can show it to you visually on a spreadsheet with a chart, which is amazing. So really, really cool.
Fantastic.
Before we wrap up, guys, for tonight, I'm just going to take you guys through. Obviously, we're getting started in the course on 22nd October. It goes for 6 weeks. There's 2 sessions per week. It's going to be on every Tuesday and every Thursday, and they're going to go for about an hour to an hour and a half each session. So me and Troy are super excited to take everybody through this stuff. We've seen so many people come through the boot camps and the Bali trip and get great results and improve their trading dramatically and understanding of the markets. And so obviously we wanted to offer a course that everybody could be a part of, even if they couldn't get on, couldn't come to Bali or couldn't come to a live trading boot camp for various reasons. We wanted to be able to get the information out there to everyone. So we're doing that, plus adding a way more value as well. And obviously we're going to be adding trade live with everybody over the 6 weeks as well, which is going to be really fun to see how the market plays out. And hopefully, we'll be making a couple of really profitable trades over that time, and people will be able to make more than their money back just from being part of the crew. So yeah. We have a live Discord group as well in the Bull Bear Discord group as well. It's for a little bit of a chat group. We'll be giving little practical examinations at the end of each night for you guys to do. Post up in there, and we'll be giving feedback on those. This is basically the content for the 6 weeks. So week one, we're going to be going through candlestick trading patterns, all that sort of stuff. A little bit of what Troy touched on before, trend lines, identifying support and resistance, and basic strategy. Week two, we're going to be going through institutional order blocks, magic of Fibonacci, Elliott waves as well, a little bit of supply and demand zones. Week three, we're going to be going through oscillating indicators. We're going to go through a little bit of the emotional market cycle as well. Ichimoku cloud, which we touched on a little bit before. We're going to touch on moving averages as well. And a few other little strategies in there, like the pivot strategy, it's good to be aware of. Week four, we're going to get a bit deeper into the BitMEX, basic BitMEX strategy and what we use for that, which is, trading on the 5-minute time frame, especially when the market is bullish. We're going to go through Wyckoff theory, which I think is something that, every trader needs to learn and understand, because it's basically how the market makers manipulate the inexperienced traders in the market to take trades against them. And we'll go through accumulation, distribution, and reaccumulation. And this is one of the main reasons why me and Troy both called the bottom of the market around that 3.2K area. And it's very, very helpful to understand how how trading ranges work, especially when it comes to altcoins. It will stop people from trying to long altcoins when they're in bear flags consistently and just continuously getting wrecked over and over and over. And then, obviously week five, we're going to be going over all about entry and exit triggers. We're going to go through trading psychology. We're going to go through risk management as well, risk minimization. Just took you through a tiny little scratch of the surface on just then. And then week six, we're going to be going through advanced margin trading on BitMEX. We're going to go through shorting altcoins and playing the trend to the correct side. We're going to be also touching on, obviously, hedging strategies and stuff like that, futures trading. And then key setups and execution to wrap up. So super excited, guys, to bring you this course. If you haven't signed up yet, I think you are absolutely crazy if you're not going to pay $330 to be a part of this course with such an amazing group of people and have somebody as such a good trader as Troy. Like, this guy's absolute freaking magician. He called the very, very top of the market. He called the very, very bottom of the market. And, there's not many traders that can make money trading no matter what the market's doing. And this guy, I always tell him, he's like an artist in the market. He's practical, freaking everything, and sometimes he has some crazy strategies, but he can control the market consistently. So just being a part of the group and being able to see all his trades and commentary throughout the 6 weeks is more than $330 worth of value anyway. So it's an honor for me to run this course with him, and I want to say a big thank you to him jumping on for the last 2 webinars to give you guys massive amounts of free content as well. I will be uploading this to my YouTube channel later on, so if you guys want to watch a replay of what we just went over before, you better jump on there and revisit that. So I don't have anything else really to say, so I'm going to wrap up there. I'm just going to check the chat box quickly and see if anybody has any questions. Troy, if you have anything to add, mate, now's the time.
That chart I was showing earlier with the on the macro scale, where our 2017 top was the second rise in that broadening ascending wedge. The time is running, not to FOMO anyone or fight anyone, but the time is running out to get educated to really make the most of this next leg up from Bitcoin. I think this is the last chance over the next 6 months or so before the halvening, before we're going to see explosive action. And if you haven't been accumulating and trading like a boss before then, you're going to fuck up that bull run, and you're going to probably lose your capital before you can find the top. So get educated, guys. $330 is pretty cheap. Don't fuck around. Get educated.
100% get educated. If you have money in this market, make sure you know how to not leave all the money in the market or give it to someone else. So make sure you get educated and take advantage because becoming a full-time trader, it can give you freedoms that nothing else really can in life.
It's liberating, man. Very liberating.
Exactly. And typically Q4 in the market is the best time. Obviously last year Q4 was pretty terrible, but apart from that, Q4s in the crypto market have been very profitable, Q4 is obviously the last 3 months of the year, which we're coming into now. So we're looking to have another huge November, December. I think personally, altcoins are primed. Ethereum looks like it's about to absolutely explode. I'm pretty pumped up for the rest of this year. I think we're going to have some really good trading to come. It's been pretty quiet middle of the year. We had some massive amount of action earlier in the year, and in some of our students were pumping out, 10 to 20 Bitcoin a day in that period where the market was pumping. So make sure if you want to become a professional trader, you want to become a full-time trader and get into this, you can. This is something you don't want to miss out on. So really excited to take you guys all through the content. If there's any other questions, shoot them through now, or we're going to wrap up. All right. Thanks a lot for jumping on, guys. We'll see you all in the Discord groups.